All right, guys, good afternoon. Welcome aboard to the Aftermarket Recap. My name is Carlos Garcia, founder and CEO of G.A.R Capital. Thanks for joining me today and every afternoon, 5 p.m. Eastern Standard Time, going over the markets. Let's go ahead and get started here. Before we begin, actually, bottom right-hand corner of your screen, white logo. I know I always ask. Click on that, turn on notifications, subscribe to our channel. Make sure to hit that like button. It really does help the channel. I appreciate all your support, as always. If you haven't subscribed yet, I hope you do, because we're trying to get to 10,000 subs, hopefully by the end of the year. I actually want to see real quick how much of the follower count we are now, or subscriber count. I always get them confused with YouTube. Wow, 8,521 subscribers. So again, all you guys, I appreciate you as always. Thank you so much for joining. Going over the markets with you is an absolute pleasure. I love doing it. And it's a really cool way to kind of hybrid that with Twitter, where I do kind of live blogging the markets. It's always fun to answer questions and talk to you guys about the markets, because there's so much stuff going on at any given moment that it's good to provide some kind of context so you can kind of see things the way we see it. And I've been doing this now, wow, almost 9 years. I started in 2014. I started trading on my own. Yeah, wow, shoot, that's crazy. Almost eight years now. 8 years been trading since October 2014. Incredible. Sorry, a little bit of nostalgia there. Let's go and get started. Dow closed slightly green, up 1 whole point today. Was actually green. Insane to see. Remember, we were up futures today. Remember that this morning was green. Nasdaq is now, this is the Nasdaq 100, not the composite. The Nasdaq composite is down 2% today. The S&P down 0.74, but the Nasdaq 100, which is the QQQs, let's just say, down 1.92%, and now officially in a bear market, 20% off its highs. Keep an eye. VIX 3177, up 3.32%. Small caps were down today as well, down 2.04%. We shorted IWM today. We shorted QQQ today, so we hit those as well. Dollar index was also down, interesting enough, 99.07. 10-year yield soared 2.14%. I was looking at financials today. I even talked about that on Twitter, but there was nothing really worth it in the risk-reward scenario. Really just focused mostly on ETFs. Again, the Qs, the IWM, and of course SPY. That's what we focused on today. Again, there was some volume on Bank of America calls. I was watching that today. I believe I talked about that today in the morning note, and I wasn't really seeing anything that was worth trading at that point. So again, the risk reward on like a Bank of America just wasn't there. But financials had a good opportunity today, had a nice move today. We'll go over that here in the heat map. Gold also fell 1.51%. Silver down 3%. The thing that stood out a lot today was oil, and also bonds fell. So bond yields were up. You can see high yield credit was down. Investment grade was down. Let's take a look at crude oil. Crude oil down 6.67%. That's in a bear market too. Again, it went up really, really quick. 130.50 was the highs. Now we're at 102.04. It tapped 100. I say we get to around 100. We may consolidate a bit, and then we'll probably bounce. But if you see it here, it looks like a head and shoulders pattern on the 1 hour on crude. We may have a little more short-term pain in terms of crude. Depends on how you see. With that being said, I'm short XLE. Again, I think crude is going to give the next opportunity to possibly short. The lowest will probably go on oil anytime soon. Will maybe be 91. So again, we're not too far away from that. But again, I would be watching crude for the short side. There's probably some opportunities in the XLEs, MROs, XOM, which I'm short, and CVX. Taking a look at gasoline futures, they were down today too, 4.84%. I believe they're in a bear market as well, 389. Yeah, I think they're in a bear market too. We bounced right off the 200-day on the daily, so you need to kind of break that. But again, you're seeing the energy prices go down. But again, don't expect gas prices by your house to drop right away. That's going to probably take about 5 to 7 days. Remember, the gas companies, what they paid for in that oil, for example, the market price, that's what they sell it at. So once they get rid of this inventory that they bought at that price to set their margins, and if we continue to go down on crude, you're going to see some relief at the pump. My call is that that's probably the worst you're going to get in terms of oil, because you had a mixture of the dollar being weaker, you had a mixture of inflationary pressures, and then you had the Russia-Ukraine thing. So in regards to oil, barring, honestly, like World War III scenario, this is probably the top in oil, in my opinion. Take a look at Bitcoin. Bitcoin is up today, 38,670, and Ethereum was slightly down. We'll go and take a look at the heat map today. Let's go ahead and update it. And you can take a look here. Look at what was green today. Healthcare, pretty defensive. Consumer defensives. Energy was down today with oil. Materials did okay. Industrials did reasonable, I guess, kind of here and there. Union Pacific was the red one. But look at financials. Financials did well with rates going up. And of course, the rate sensitive stocks, your technology, communication services, cyclicals are going to take a hit. So if you're watching really bond yields, people always say, oh, why do you watch bond yields? What does it matter? The yields going up matters because that affects certain sectors. So again, when yields go up, again, you're more likely to short tech, you tend to short cyclicals because, again, the costs rise and they have to pass that over to a consumer who may not choose to shop at that particular store or what have you. And with technology, again, they do best when they actually have lower yields because of the availability to for loans in terms of availability of low interest rate debt. So again, Apple has bonds, Microsoft has bonds, Google has bonds. Google's all cash right now. I don't think they have any debt. But again, Amazon has debt, Tesla has debt. So again, that's going to increase margin pressures, and they've done well. So, and again, also we have the commoditization of the futures market with all the stocks. I had a member investment club ask me, well, how is Starbucks down like 42% from its recent highs? And again, I own Starbucks, and I'm like, again, you actually have the commoditization. It's a cyclical. So again, a rising rate environment. Again, when commodities go up, people are probably going to be like, hey, should I go ahead and buy that latte? Should I make it a venti? So again, with higher inflationary costs, the first thing to kind of go away is the cyclical. So again, you kind of see that when you look at bonds. Let's go ahead and get to E-mini futures here. There's a couple of levels I want you to see, and then we're going to go ahead and go to the Q&A. And going in the 1 hour, again, short term, kind of the same revisiting level of last Monday and Tuesday. So looking at this here, this is where it gets interesting. We're going to go to the daily, and no, we're going to go to the hourly on S&P. So you're probably thinking to yourself, well, we have a lot more pain coming to the Fed, but you kind of have to look at the way the market's been moving lately. It's been very inverse. The days that it looks like things are going to go better, we get red, and the days that you think it's absolutely bloody, we bounce the next day. So I'm pretty much betting on a bounce in the markets tomorrow. I believe that we do. We'll probably get to around 42.30. Again, 42.52 is a big level. You got to clear that before anything, even talks of calls or anything like that. Maybe a bullish reversal, but we're not there yet. But again, 42.52 is that key level on S&P futures. I think we'll get to around 42.30. Again, if we're red tomorrow, I'm pretty sure Wednesday will be green, and they'll have the narrative that the Fed saves the market, or they'll be very soft. But again, right now, it's a technical-based market. Again, looking at XOM, I have the 80 puts open currently. Again, a break of that 200-day. We consolidated. Again, I've been wanting to short oil now for a little bit, but I was long oil in July of last year. But again, we should retap right here around 80.45, kind of around 80 of that level. And you can see that consolidation that was from 2 Fridays ago. You can see just the pop and then kind of a second hit to the upside and came back down. We'll see if oil continues to slide a little bit, maybe gets below that psychological number of $100 a barrel. Taking a look at Nasdaq. Nasdaq, I went ahead and put up on Twitter the RSI, and we're at the lowest level since March 2020. So again, extremely oversold conditions. I think Nasdaq is primed for a bounce. Really the last line of defense. If I had to go last line, like this is it. This doesn't hold. It can get extremely ugly in a hurry. It's probably going to be around 12,764. That's you're talking about April 2021 levels. That's where we'd be at. And again, we have the retracement levels obviously based on the recent highs, but again, it can go a lot lower. But right now, we're just around May 2021 levels. We're nowhere near wiping out the Nasdaq gains from COVID. You're talking about at that time it was 6,600. We're still up 100%, more than double where we came from in terms of the bottom of COVID. So I highly, highly doubt that we'll revisit COVID lows in terms of the Nasdaq. That, again, is it good as a possibility? Yes, but you talking about the destruction of wealth out there would be absolutely insane. Market caps wiped out in a heartbeat. You're talking about revisiting here is absolutely pretty much apocalyptic at that point. But again, I would say right around April 2021 seems about right. Again, you have an extension all the way down to 10,713. That seems about right. But again, we may be getting near capitulation. Why? Because we're going to rip off the bandage of raising rates, addressing inflation. So Is this priced in? I believe so. That's why I believe in a little bit of an inverse here. I don't want to hold puts for too long right now. If anything, I'm possibly going to the call side for tomorrow. That's what I'm looking at. Again, I hit nothing but puts today, but I think we're going to get into some calls tomorrow. I think tomorrow we do rally a little bit, maybe get to 42.30. If we get to 42.52 by Wednesday, that'd be very big. I'm kind of targeting 42.55 by Thursday morning is for what I'm sure I'm looking at on the S&P. I think a lot of this was positioning ahead of the Fed. That's all. Let's go ahead and answer some questions. Hey, what's up, GS? What's going on in the market? Well, a lot of things. Obviously, you have drying up liquidity. Look at the S&P futures. Lower volumes. Again, we keep sliding down. Again, that increases a meltdown. Not completely meltdown, wipeout, but slowly melting downward. That's what we're getting. Again, you can see it here on the S&P. So again, we're getting a lack of liquidity. We're going to get a tightening cycle. We're going to get into a point where, you know, the Russia-Ukraine thing could be tipping over at any side in terms of how volatile that can get. So again, you're kind of like a mixed bag of everything here. Why would you want to? You need to find a reason to buy this market rather than a reason to short it. That's basically where we are. LQD is reaching recent lows should be worried. That's something that's very, very important. That's investment grade bonds. Now that will change, in my opinion, right after the Fed. I think that's to the point here. We're right at pretty much July 2019 levels. Wow. July 2019 levels. That's pretty bad. So again, all this is Fed liquidity, adding less risk out there. So again, could we retest some, COVID lows? I don't believe so. I think a lot of this again is just fear of what could possibly be with how would the market react to higher rates? And then again, we're going to get our first look at that on Wednesday. Let's see here. It's 12,500 next on the Nasdaq. It definitely could. I have an alert at 12,757. It can start getting really low, guys, to the point of 10,713. But I don't foresee that happening, barring something really, really bad in terms of the geopolitical structure. It wouldn't be a structure based on the market and interest rates. It wouldn't be a fundamental reason of that much of a decline, because then you're talking about not just a bear market, a recession type move where you're almost 40% from the highs. Yeah, we don't have a recession. So again, that's very unlikely. I would give that maybe a less than 2% chance that it happens. 12,757, more of a shot, but again, I think 13,000 is probably the low we're going to get. I think we're closer to the bottom than anything else, in my opinion. Thoughts on X1 puts? I have X1 puts. I assume that, okay, Cadillac is in the group. So really here on XOM, we're right below the 200-day, and we're comparing it really to crude. So again, crude, you can see you could check back down to 100. We should be able to get this by tomorrow, even if we have weakness in the stock market itself. Now, if we have some strength in the stock market, and we've been seeing lately the inverse correlation between WTI oil and S&P, but now today it's correlated. So again, it's going to be a little interesting to see over the night how oil builds. If we see oil continue to sell off over the night, XOM is going to print tomorrow. But if you get oil kind of stabilized, maybe down 1%, maybe up 1%, but the S&P is up a good 0.25%, a 1% day or something like that overnight, where we just get a rally in, XOM will go ahead and probably hit 84 at that point. So again, it just really depends on the demand out there overnight as traders are positioning ahead of Wednesday. If I wanted to trade small rally this week, what stock would you pick? Probably more likely Apple or Qs if you're looking for a rally, because these or Microsoft, these QQQs have been absolutely brutalized down. Let's see, did you buy any shares recently? Other than SpyG on Thursday, I have not bought anything else. I have not bought any more stocks as of yet. So only crypto and SpyG right now. And all right, so we'll go ahead and leave it there, guys. Have a great rest of your afternoon. We'll catch you guys tomorrow for the morning note, 9 a.m. Eastern Standard Time. Let's see how futures run overnight, and we'll go from there, guys. Have a good one.